Phil Zeman, who is with Center State Bank. Welcome, Phil, again.
Thank you. Great to be here.
Yeah, Phil, tell us a little bit about your role at Center State Bank, and then I'd like for you to really talk about some of the programs that you offer developers and some of the programs that are available for affordable housing through Center State Bank.
Sure. As Jane said, my name is Phil Zeman. I'm the Community and Economic Development and Relationship Manager at Center State Bank, soon to be South State Bank. We recently merged with South State, and I think by January, February, the signs and everything will change over. So we're technically South State Bank, but haven't gotten used to that name yet. But I took this position in January, and it kind of gave me an indication that we're really shifting to focus on the needs of community development. And you know, I've only been in this since January, and it's just amazing to me. You know, I was doing a report, I did a presentation for our community development group, and it was around affordable housing. You know, because I'm teaching myself this, but it was amazing to me. It was astounding, frankly, that 47, this is of renters, 47% of all renters in the U.S. are cost burdened, which means they can't afford their rent. And I was appalled by it. You know, intuitively, I knew there was an problem with affordable housing and people can't afford rents and whatnot. But when I got the report, this was a report done by Harvard, I was amazed. And it broke it down by every single MSA down to Lakeland, Winter Haven, everywhere. I mean, the top 50, 100 MSAs. And again, I was just amazed that here we are in America, and, you know, I'm in a situation where I don't see it day in and day out. But when I saw that statistic, I just felt as a human being, we really need to do something about that. And being in banking, we have the opportunity to do more about that. So that's kind of where I've been in the last year, really understanding the landscape of this marketplace. And, you know, we are fortunately positioned to do what we can to help out. But to answer your question about financing vehicles, and I'll speak mostly to the industry because, you know, it's common pretty much from bank to bank to bank. But I think Tamara alluded to it previously that the cost of, you know, of construction is the same if it's low income or market-based type product. So investors or developers there's not a whole lot of developers out there that are itching to get into that space. You know, and bankers, we base our loan on the value of the property. Well, just take an example, there might be a $5 million cost property, but when you factor in low income rental rates, that value is more like 3.5, say in that example. So we're in a lower amount, and therefore there are vehicles out there. There's low income housing tax credits, also known as LIHTC. There's block grants. There's a lot of different vehicles that developers that are in that space have gotten to know all these programs, and they're sophisticated and dynamic and involve a lot of legal, but there are a number of developers out there that have become experts with that type of financing and understand all the different resources out there to help stack that equity, if you will, so that the lower loan amount makes sense when you have this other contribution from all these different equity sources. So, you know, but it's still few and far between. You know, another statistic that I saw was in the last 10 years, and this Harvard study rates this particular metric, which is the number of rental units, you know, and then by category. And up until this last 10 years, the number of affordable housing units grew at a comparable pace as luxury. But this last 10 years, luxury apartments far outpaced, exponentially outpaced all the other categories, and low income actually declined.
I think, you know, I was driving by a new development over in East Polk County recently, Phil, and on the signs outside for their marketing, it says, "We help with down payment." And I thought, now that is an interesting marketing, you know, I don't want to say scheme, it's not a scheme, but it's a very interesting way to market, though, trying to sell affordable housing, right? How do some of those kind of programs come into action? How do they get there? How does that developer get to the place where they can be able to offer down payment assistance? And I guess I'm asking both you and possibly Cindy this same question because I think that that's interesting.
Well, we, when we go, in fact, I'm working with somebody in Haines City that's building single family homes, but I'm working with others as well. And what typically they do is they align themselves with the local housing authority that will put together down payment assistance programs, and I think those are the ones where developers kind of gravitate towards also versus the ones you're going to see on the billboard. When we see something like that, we obviously take a lot of time to make sure we understand how that program works and that it's legitimate. But
yes.
From that standpoint, like in the case where we'll do financing, provide like a construction line of credit for a developer building single family homes, and they've targeted this area for low to moderate income, we want to make sure that they know this, that they align themselves with the housing agents, or we can put them in contact with the agencies that are providing down payment assistance and we can also provide the end financing for the homeowners. So we're kind of working it from both angles. We're giving the construction loan, which is the most challenging piece to get into place because our repayment source comes from the buyers, right? Getting the end loan to pay the line of credit off, construction loan off. So we need to be comfortable that they're properly pre-qualified, and part of that process is making sure those down payment assistance programs are available and those folks qualify for it. So that's kind of how we look at it when we're looking at a single family home development.
The point that I think is impressive to this is that is another branch of public-private partnership that's working, where the approach is different. The approach is coming from the developer to the financial institution, and the housing authority is brought in on the backside to try and get folks qualified for that down payment assistance. So I love that our financial institutions are able and are doing exactly that they're stepping up to the plate of this dynamic need.
If I could just comment one other point on the private-public partnership, particularly in Orange County, because Mayor Deming put together a Housing for All task force last year, and they came out with a variety of recommendations. Actually, they came out with a 10-year plan, which is really impressive. Because for one, I know a lot of the people that served on that task force, and like you guys mentioned, I mean, here in Central Florida, we are at a disadvantage for a variety of reasons. We can go into it, but this show's not long enough to do that. Why we are in the crisis that we're at doesn't really matter. We are where we're at, so we need to do something about that. And so that's the government's. I think a lot of municipalities are starting to take a hard look because they're starting to realize if we don't do something, this gap's going to continue to increase, and if it increases much more, frankly, it's going to, create a whole lot of problems we don't want to have to deal with. I mean, we don't want to see folks out on the streets. We don't want to see them having to scratch for every single dollar just to make their rent. So I think there's a lot of concerted effort around that. And, just another example is recently in Orlando, there was this new group that came together called the Paramore Asset Stabilization Fund.
Yes.
And what they did was they identified 80-something homes. Was it 80-something homes, single-family homes in the Paramore district, and private-public partnership. The county and city were involved, and then 3 other nonprofit organizations, Central Florida Foundation and Florida Community Loan Fund. Those 2 and another one out of New Jersey were the ones that came in to help fund it. But that was a great example of where these were all infill lots.
Yes.
Of homes to deteriorate, and it wasn't like they're building new homes or building new units. They're going in and fixing these exact existing units to help the folks that are in there stay in there. And then secondly, they got a program, if they stay in there for 10 years, they have an option of buying that home. So, I mean, that was the most creative thing I've seen in recent times. And then, lastly, some of those members of that same group have put together the Central Florida Housing Impact Fund, where again, between banks and philanthropists, corporations, municipalities are putting together this fund to raise money to fill that gap that we were talking about so that we could keep it local. And they've identified, I forget the number of projects that are already in need, that once this fund is raised, the developers are ready, the banks are ready, and they just need that gap funding available. And that's what that's going to do. So there's a lot of good things that are going on that excites me about being in this space, because it's a really big problem. It's a lot bigger problem than I ever thought it was until I saw the statistics.
Absolutely. I think that two things tell you that affordable housing is an issue, or housing in general for everyone is an issue. It's being in the community, working with the community at some of the most challenging levels, or you're reading that data that's coming out and it's coming out and it's coming out and it all looks the same nationwide. And some of the projects that you just mentioned are amazing projects. They are the perfect example of how we all need to be working together to tackle this situation, so that we can come up with some innovative ways of making it work.